Good morning, friends. Welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. And today's topic is an insight into the board's report. The app topic at right time selected by Sudhakar. Last week we gone through the notice and agenda, and it was very well accepted, participated by all the participants. Everyone has taken and given compliments as for the same. Thanks a lot for such a big presence in that webinar. Now today's topic relevant is also insight into board's report. Today, looking at the timing, it is right time. And we have with us our panelist. Mr. Anshul Jain is a Vice President, Company Secretary and Compliance Officer of Alok Industries Limited. Welcome, Anshul. Thanks a lot for your time. He is our favorite panelist, and thanks Anshul for taking out time. And to formally introduce Mr. Anshul Jain. Mr. Anshul Jain is actually everyone knows him because he's a very public figure and he is regularly appearing in various forums, writing articles, various committees and all that. But we need to formally introduce. So Anshul Jain is a fellow member of ICSI. And he has a great experience in corporate governance compliance officer as a plus 23 years of experience. His key expertise includes in corporate law, SEBI-related matters, information technologies, IPO, merger amalgamation, and corporate finance, risk management and regulatory compliance, anti-money laundering and capital market regulations, and various other things. I am not listing that all. He is presently working with the largest conglomerate in India, Reliance Industries Limited, as a part of corporate secretarial vertical and managing group companies and Alok Industries Limited, a company listed at NSE and BSE. In Reliance, he has worked for various business verticals, namely hydrocarbon, retail, textiles, etc. In past, he has worked with ITC Group, Mehta and Mehta, KFin Technology, etc. He is a proud ex-Mehta and Mehta. He was awarded the top 10 Chief Compliance Officer of country by CEO Insight for the year 2020-22. He was a member of the Auditing Standard Board for 6 consecutive years and also was a part of Task Force on Corporate Law formed by the ICSI. He is also honorary consulting editor of Corporate Law Advisor, part of GITO Professional Forum Mentorship Program, and also mentor for Reliance Foundation Skilling Academy Mentorship Program. He is passionate about sharing knowledge and driving innovation in regulatory compliance, governance, and technology. He has not mentioned his profile, which I mentioned that he is a regular speaker at various forums, including ICSI, ICAI, and various business forums. And he is writing articles and sharing his knowledge since several years. Welcome, Anshul. We have with us.
Thank you very much.
We have with us our own Sudhakar Sarvatula. I may not give any introduction, and Mr. Bala. We have today's presenter, Ms. Sakshi Gupta. Sakshi is associate partner of Mehta and Mehta, and she is in charge of Jaipur branch. And she is handling various corporate legal compliance and NBFC compliance work. She has exposure. With this today's topic, we will start as regards insight into board reports. Board report, when we say, a lot of information comes in our mind, and it's a fact thing. This is the once in a year when the directors, the trustee of the shareholder, actually the investor, is giving in-person report to the shareholder. Of course, it's now video. They have to give information what they have done till entire year for the company they have been entrusted. What was the event happened, how they handled. Not only that, they have to give the vision for future, how they are going to handle the company they are entrusted with. What are the management we are going to do. Please note that don't take board's report only in the angle of compliance, rules, regulations, and act. There are various laws, rules, regulations applicable for the content of the board reports and how, when it will give an amount. But also, when you look at it as a report by the trustee of shareholder and the stakeholder, it is not only stakeholders, board are also responsible to other stakeholders. We will understand the importance and the vision what we should give in the board's report. So when we are telling stakeholders, there are several stakeholders. This can be in India or outside India. Further, we are writing that the facts that this event happened, we handle the events in this way, and this is our vision, which will be referred back for several years by so many stakeholders for different purpose. And they will look into that information in different way. So be careful while drafting what you are revealing and what you are writing. Please ensure you are not mistaking or not giving any information, because you yourself is declaring to the public and the entire world. It can also serve here. You should know who can be your stakeholder. That vision will help you to draft that. Because suppose the company is planning, for example, to the export to the European countries. You don't require to give BRSR report, ESG implementation and all that. But for that European countries, it's the most important thing. So please start implementing that. And start doing that. That will help the company. As a CS, you should know all this. And you should ask this question and help in drafting the board's report. It is not only compliance. It is a message by the board to the entire world what the company has done and what the company is going to do today and in future. If you look that way, board's report is the most important thing. And this way, I'll leave it. And that's why one point, there can be several examples, but I'll leave it for the presentation. And one important point, since it's such a big document, which has a lot of information, it should not be done anytime at the last moment. It should be parallel exercise so that you don't miss any important event. You keep in mind what you thought when the company was doing that action. You can edit that later, but you don't miss anything. So please keep it parallel exercise. Then only you will be able to give it. Like exam, we don't do study at a day of exam or a month before. It's entire year. Then you get a best result. With this word, I'll leave it. I'll request Anshu to say a few words on the topic, then Sudhakar, and then Bala, and then Shakshi, you can start the presentation. Thank you. Over to Anshu. Thank you.
Hey, good morning, everyone. Thank you all very much, especially Mehta and Mehta, for inviting me once again, kind of a home for me. It's both an honor and privilege to be part of this esteemed panel today. And as we discuss the board's report, as Madam has already mentioned, that it's a crucial document which requires a lot of disclosures. And the board's report is far more than just a regulatory requirement, which I feel. And it's a narrative of the entire journey of a particular year by a company, and it provides a lot of insight into the financial health, corporate responsibility, governance practices, emerging risk, ensuring that the shareholders and regulator have a clear picture about the organization's affairs. And with evolving compliance standards such as Companies Act, SEBI regulations, we have Secretarial Standard 4 for the board's report. I think Sudhakar sir was the part of drafting that particular standard. And the board's report has already transformed into a powerful tool, which not only the safeguard the transparency, but also strengthen the investor confidence. Then today, as we are going to delve deeper into this intricacies of the board's report. I hope we will be able to examine the best practices and explore the regulatory updates, whatever is on our way. And as we know that Madam has already mentioned something about that it's a concurrent document, like it's a parallel exercise, which I also fully agree that as and when we do some particular corporate action which is required to be disclosed as part of the board's report. Say, for example, we are investing in some, we are acquiring some company which is going to become our subsidiary. Now that disclosure is required that the company which become the subsidiaries during the year. So that piece should be, enter in one particular document which can be used for drafting of the board's report later on. So it's a concurrent exercise, which I fully agree with that. And as you may be aware that the MCA, it's by this notification dated 30th of May, notified a new document which is now to be filed as e-form, that is the extract of the board's report. And the way this extract is designed, I think it may lead to change in our drafting style also in board's report. Though it's a premature thought from my side, but still I feel prima facie looking at the document, specifically like some of the points which are mentioned over there, like 186 disclosure, which talks about in case the transaction is not reportable under 186. So we need to give the description that why it is not, reportable. Right now, what we mention in the board's report, just whether the whether the section applies or not. So if there is no transaction, we just give a reference of that particular thing, and or alternatively, we give the reference to the financial statements, notes, number, and all. But this extract also asks that why the transaction is not reportable. We need to give the brief descriptions of such kind of small things are there, which may lead to change the drafting style of the board's report. Not only this, as we also know that the board's report, there is one particular section in the Companies Act which gives the entire details that what should be there in the board's report. Apart from that, there are other references also in at various places in the Act, and then followed by the rules. Then of course listing regulation is there, which talks about, and if any other laws are there which talks about disclosure in the board's report. So it's a lengthy document which is to be taken care of all the 360 degree of the law, which includes the Companies Act, LODR, other acts, rules. Like FEMA has some disclosures with regard to the downstream investments and all in the board's report. So those also to be taken care of. Even the extract, which just I mentioned, it also designed in such a way that it gives some of the specific disclosure which you need to mention. And apart from that, at the end, it says that any other disclosure, give the reference of the sections, give the details, what is to be, provided in the extract. So it is also going to be a exercise in itself. So let's see how, this year will go with regard to the filings and all applicable effective from 14th of July. So this is my initial thought. Let's, as the session will begin, we can discuss more. Thank you very much.
Thanks, Sudhakar. Your comments,
Yeah.
please.
Good morning, everyone. As I have said in my previous two webinars, that we are, and all the company secretaries' hands are full in the preparation of the annual reports. And fortunately or unfortunately, every segment of the annual report is the amount of information what is to be furnished is getting growing. And ultimately, it looks like as if you require a separate department for every segment of the annual report. So we have already conducted a program on BRSR reporting that was last week. We have brought the finer points and what are the do's and don'ts so that it will be handy to the company secretaries who are in service as well as the people who are in practice who are conducting the secretarial audits. What are the points, the finer points we have to focus upon? We brought into the notice of the participants. Last week, we have dealt with the notice of the meetings as well as the agenda. And that time also we have brought a lot of finer points because most of the times what happens is whenever we prepare these kind of reports, we pick up the previous reports of our companies and we pick up some reports of some other companies and try to do something. So with that, what happens is our mind is already blocked the four corners only. We never go and think out of the box. So it is always better, first and foremost, to give all the ingredients, whatever have to go into that report, you have to keep it ready. And after that, you take it other reports as a referral points, but never ever do the copy paste. Last week, I have explained in the copy paste what kind of damage it will happen. And this time now we are talking about the board's report. And finally, we are going to organize very soon one more webinar on the role of the company secretary in preparation of financial statements. That we will do it very soon. So in today's board's report, what as Anshul has mentioned that SS4, Secretarial Standard 4 is a document, though which is not mandatory, which is recommendatory. SSB members have put a lot of efforts and the ICSI ultimately has brought the document. But with all due regards, I don't know really how many participants are, number one, aware of the document, that is a document in existence. Number two, how many of you have read it? Number three, how many have you are implementing that? In life, certain things may not be mandatory, but it is always recommended to follow that. Getting up early in the morning, go for a morning walk. It is not mandatory, but it is recommendatory. And what are the benefits? We know that. Same is the case with SS4 also. If you see in the board's report, the amount of information what is to be furnished, it is not under one section or two sections. It is spread throughout the Companies Act. Any kind of mistake anywhere, it is going to catch your neck. Number two, board's report is not a brochure. Board's report is a legal document. So you have to furnish only that information what is legally you are supposed to furnish. No forward-looking statements have to be made in the board's report. You cannot give projections. You have to give actuals what happens. At the same point of time, several times I have been asked this question whether the board report is to be prepared on standalone financials or consolidated financials. Board's report is to be prepared on only standalone financials, not on consolidated financials. Few people asked me this question also, sir, where this is written? It is written in SS4. Please go and refer to that. For the benefit of the members and the fraternity, certain things what it is not written clearly in the law explicitly, we have brought that in SS4 as well as the guidance note. At the same point of time, only thing what will come in the board's report as far as the consolidated financials are concerned is that when you give the turnover and other some what's called numericals like your turnover, your profitability, your raw material consumption, etc. things, that time you will give standalone vis-a-vis the consolidated financials also. That is the only way it will come. Otherwise, you have to prepare as for only standalone concerns. Similarly, any kind of wrong interpretations, because of that, if you are not going to furnish the information in the board's report, in case of Meenakshi Textiles case, where that company has wrongly interpreted CSR applicability under 135(1), they took a profit after tax instead of profit before tax, and they have not complied with 135. Because of that, the ROC Coimbatore has given them the show cause notice and all, and ultimately they were to revise their board's report. Unlike 1956 Act, under 2013 Act, you can revise your financial statements as well as the board's report voluntarily also. And that so ultimately that company was to go to NCLT, got the approval of NCLT and revised the board's report. All those things are there, which we will discuss it while Sakshi is making her presentation. But one thing I want to bring in that board's report is a legal document and utmost attention as well as seriousness is required. I give a pause here and request Bala to take it forward. Thank you.
Good morning to all of you. I have a great pleasure in welcoming you all on my own behalf and also on behalf of Mehta and Mehta. You heard about the importance of the board report from both our earlier panelists. I just only like to add a few things. As Sudhagar puts it, it is not only the SS4, there is also an excellent guidance note which has been actually brought by the institute. As Sudhagar puts it very clearly, the guidance note gives you various clarification, examples, details, etc. and all this thing, which is really, really helpful for people. Second thing, he touched upon the very final point of cut paste. I came across one of the ROC adjudication order. The board report was excellent, but the company's name was erroneously mentioned in some other companies. Because in cut and paste, somebody has not noticed. ROC has heavily penalized the company. This is what it has happened. And Mr. Anshul mentioned, we'll have to also take care of the other applicable laws. In many of the organizations where especially the women are employed, the POSH Act is actually applicable. There are complaints associated with the POSH Act, making a committee, and there is necessarily a women member to be part of the committee and the regular reporting, etc., and other things and all that. If you miss out, then again, that is a problem. So really speaking, board report is nothing but it is a progress report of the company for the whole year, what all has happened. As Sudhakar puts it, once again, I reiterate, it is the reality, what has actually happened to inform to the stakeholders of the company. That is the thing. So it is very important board report. There are a lot of issues, lot of cases, and nowadays regulators are going through each and everything. Now everything is available on the digital. Unless we are careful, we are putting the company and our directors into the problem. We need to take care of it. That's all. As we go along, we'll explore the other things. As members have been putting the concern, their queries, etc., I request to put all your queries, etc., in the chat box. We'll be taking it from then and there. At the end, subject to time availability, we'll permit you to raise your hands and people can interact with the people. I think with this, I ask Sakshi to proceed with the presentation. Over to Sakshi, please.
Yeah, thank you. We are crossed today 5 minutes of introduction. Yeah. Sakshi, start, please.
Good morning, everyone. So for today's topic, we have insight into the board's report. And to start with it, so everybody has given a very good introduction to the board report. And as it has already been mentioned by our panelists, it is a very important document, or rather than a document, a communication from the company's board of directors to its stakeholders about the financial and non-financial information of the company. So it includes everything or anything which has happened in the previous year or the year under review. Whatever happened in the company is required to be put in the board's report. For example, like if there was, what was the performance of the company in the relevant year, if there was any changes in the management or the capital structure of the company, if there has been any dividend which is company is recommending, or any capitalization of reserves or future further issue of capital, or in fact the details of the top 10 employees of the companies as well. So it is a very well detailed document which requires whatever has happened in the previous year to its stakeholders. To start with it, first we'll understand what are the laws which has been applicable and how it has been governed to make a board report. So the major details what are required to be covered in the board report are given under Section 134 of Companies Act 2013 and the rules made thereunder. However, in the different sections of Companies Act 2013, at certain points it has been mentioned the certain details which are required to be given in the board's report, that also needs to be taken care of. Only 134 is not the only applicable section. It includes the majority of the things which are required to be given. And the secretarial standard SS4, which is on the board report of the board of directors, though it is recommendatory, but it has everything which has been mentioned in 134 and the rules and the clarifications on that regard. So we have covered section SS4 as well in our presentation. And for the listed entities, SEBI LODR requires certain additional disclosures in the board report. So we will be discussing about that as well. However, for the companies who has been regulated by other regulators and has some sector specific laws requirements, they need to adhere to that as well for the disclosure requirements. Now, the major contents of the board reports as per Section 134 of the Act includes the extract of the annual report. However, if a company has a website and they have given the extract of the annual return, MGT9 on their website, then they can give the web link of the same in their board report. They are not required to give the complete annual return in the board report. Then the number of the board meetings held during the year, the director's responsibility statements. We are going to discuss this in detail at the later stage of our presentation. Then the declaration by independent directors of under Section 149 subsection 6, which includes the declaration of their independence and if they have any pecuniary relationship with the company, which is not allowed. Then the company's policy on the director's appointment and their remuneration. The details of that particular policy is also required to be given in the board's report. The comments by the board of directors on the qualification or the reservations or any adverse remarks made by the auditor of the company, those adverse remark of the auditor along with the explanation by the board is required to be given in the board's report. Under section 186, the particulars of the loans, guarantees, or any investments made by the company. So I guess for the listed entities, this disclosure becomes a bit more in detail, which requires all the details of the loans which is given to the holding or the subsidiary or any other person, and what was the loan, the amount recovered as well. The other details which requires are the details of the contracts or arrangements with the related parties in Form AOC2. Then companies' affairs, what companies are dealing with, how it has been doing. All these details are also required to be given quite in detail in the board's report. If company is proposing any amount to the reserves, then that details are also required to be given. In the case of dividend, if company is recommending or declaring any dividend for its shareholders, the details of such dividend are also be required to be given in the board's report. If there has been any change which has been happened in the previous year and that change is affecting the financial position of the company between the end of the previous financial year to this report, then those material changes are also required to be given in the board's report. Then there's a requirement of to be given of the conservation of energy, technology absorption, and foreign exchange earnings and its outgo. Under this segment, the company is required to give the detailed description about what the efforts and the steps companies have taken to conserve such energy and how it has actually helped the company after taking such steps. Those details are required to be given. And in case of technology absorption, if company has imported certain technologies as well, those details are also required to be given in the board report.
Just 1 minute, Sakshi.
Yes,
Sorry, this slide is clear completed.
no, just 2-3 points are there.
Yeah, completed. So then Sudhakar will give comment. Such.
Okay.
Hello. Sakshi, this slide you have completed or yet to be completed?
I just need 2 more minutes, sir.
Okay, go ahead.
Yeah. So in case the risk management is applicable on the company, then the details of the risk management policy is required to be given in the board's report. Similarly, if CSR is applicable on the company, then the CSR details, its policy, and the CSR report of the company is required to be given in the board report. And the statement on the annual performance on evaluation of the board, committees, and individual directors are also be required to be given. Under this annual performance, if there has been any observation of the board during the evaluation process, those observation, and if there has been any observation in the previous year, those details of the observations of the previous years and the action taken by the company on those observations, and on the current year's observation, if there are any proposed action by the company. So such details are also required to be given in the board report. Yes, sir, I'm done on the way.
Yeah. See, there are 2 points I want to deal with. Number one, the state of the company affairs. 134 talks about this, and okay, that state of the company affairs is to be reported in the board's report. What exactly it means by what is the state of company affairs means, what information we have to furnish here, this, nowhere you will get that thing. And several times the question comes in, under this, what exactly I have to write as far as my company is concerned. So please refer to, again, the guidance note on SS4. There we have very clearly given elaborately what are what is the information you have to furnish under the state of company affairs. Second thing is about declaration of dividend. Normally what happens is when something we do it only, we report that. Dividend is concerned, even if there are no profits or the board is not intend to declare any dividend or recommend any dividend, still you have to write a paragraph on that in the board's report. In case the board is not recommending any dividend, they have to say that despite the fact there are insufficiency of profits, because of that there is no dividend, or considering the what's called as okay, the requirement of the resources, the same are being plowed back and the board is not recommending any dividend. That statement is to be given. What is the rationale for this? Again, please refer to guidance note on SS4. There we have given clearly this rationale. Why about the dividend? We have to give definitely, even if you are not recommending a dividend, still you have to say the reason for that thing. The rationale for that is there in the guidance note. Yes, Sakshi. Yeah, actually you want to talk something?
Yes, sir. So this is with regard to the previous slide, Sakshi, where you mentioned about this MGT 9. I think that particular rule is deleted and it is only the web link of the annual return is to be given. The extract of annual return is no longer required as per the rules. So that's the only corrections I wanted to make.
One more thing I wanted to
He
add
has
here.
mentioned, or actually, even the in chat box, somebody has raised the question whether that is mandatory.
No, so as per the
Yeah,
so
actually.
that rule 12 that which talks about which was talking about the extract of an annual return, this rule was deleted and in place of its new rule came into place, which says that the copy of annual return shall be filed with the registrar with such fees as may be specified for this purpose. The entire rule mentioning about MGT 9 is deleted, I think, way back in 21 or 22 time somewhere.
Yes, Akshit, go ahead.
I just wanted to add one more thing here. When you are talking about the energy conservations, etc., in one of the companies, they said that, we are not being a manufacturing company and other things, and this is not applicable. That is what they have written actually. Really speaking, ROC has taken up this matter. He said, what is this you are all talking? There's no energy conservation, etc. Don't you think that you have to do the energy conversion, you have to have the alternative method of emerging now with the solar and other things and all those things? Those sort of the things also has taken place. As Sudhakar said about the dividend policy, whether it is the office or manufacturing, other places, etc. on the topic, at least you have to tell them what you're doing. Because in fact, many places we see, switch off the lights when it is not needed, switch off the fan when it is not needed. We are taking all sorts of precautions. So the reality is what we are doing that is required to be reported. So just not saying that it is not applicable, we are being a office, because it's not that office you are not using the electricity or you can't do anything and everything at all. Because this issue also has come up actually. Yeah.
Very important.
Yes, sir. So because under the old act, actually there was a rule, and that rule there was an annexure, and that annexure there were certain kind of companies which were mentioned, to which to those companies only this disclosure was required. Now, when the new act came, so actually that annexure and everything was not there. So technically, it is applicable to all sort of companies. But somehow the old practices are being followed that it is not applicable to me because I am not a manufacturing kind of a company. Which I agree that it's applicable to all sort of companies.
Yeah, as you really touch upon the point, as Sudhakar puts it in the cut and paste, because mindset is from 1956 Act is carried over. But 2013 Act is totally revamped, and there are many requirements. People have to unlearn the 1956 Act, and we have to relearn the 2013 Act for the people who are still in the 1956. Yeah. Yes, Sakshi.
So the details of internal financial controls and their adequacy needs to be given. Any details of any fraud reported by auditors under section 143 subsection 12, other than those which is reportable to the central government, are required to be given. Any other matters which has been prescribed under companies accounts rules 2014. So there are certain requirements which is to be which has been mentioned under companies accounts rules 2014 with respect to the financial statements and their disclosures. So such details are also need to be taken care of. Any applications which is or proceedings pending under the insolvency and bankruptcy code during the year are required to be given in the details of such applications, and the pending proceedings required to be given in the board report. And if the company has done any valuation and there was a difference between the amount of valuation done at the time of one-time settlement and the valuation done at the time of taking loan from the bank or the financial institutions. So if the difference of such valuation during the year is also required to be given, and the reasons why such difference is there in the valuation. So the other things which is mentioned here and there in the Companies Act, other than Section 134, which is like the auditors, so they are required to report if there has been any fraud which has been mentioned, or they have any adverse remark with respect to the performance of the company. So such details are required to be given in the board report. Then Section 149 deals with the appointment of directors, wherein it describes the qualifications and the categories of the directors. And the company's policy with respect to the appointment of the directors and complying with Section 149 is required to be given in the board's report. Then the details with respect to audit committee as per Section 177. So such details with respect to audit committee related to its composition, the meetings held during the year, the number of non-executive directors, and all such details are required to be given in the board's report. Similarly, for the nomination and remuneration committee, which has been governed under Section 178 of the Act. So details with respect to the composition of the committee, its the meetings happen during the year, all those details are required to be given. However, also the NRC is required to recommend the remuneration of the directors and the senior management. So the board report requires the detailed disclosure on the remuneration and of the directors and the senior management. So such disclosures are required to be given. Also, if there is a policy of the remuneration policy of the company, the web address of such policy is required to be given in the board's report.
Yeah, Sakshi, one minute.
Yes, sir.
See, in the first bullet, that in case of any kind of qualifications or observations of the auditors, the board's report should comment on such remarks, qualifications, whatever it is. Now, recently, one PCS called me, who is doing the secretarial audit of a company, wherein the auditor has qualified the report. And in the board's report, it was mentioned that by the directors that with regard to the qualifications of the auditors, the necessary clarification stroke replies will be given at the at the annual general meeting. So his question was, is it a sufficient compliance, or they have to give the clarifications in the board's report itself? The answer to that is you have to give whatever your comments, your clarifications, your explanations, everything. You have to give it in the board's report only, very clearly. You say that I will clarify that at the AGM, that is not an answer to that. What is the reason for that? One reason is this is the communication. A board's report is nothing but a communication from the board to its stakeholders, not only to the shareholders, but to the stakeholders also. Whoever is referring to your annual report, to your financials, if there is a qualification of the auditor's report, they will definitely look for the board's clarifications or explanations on that. And if you say that I will clarify that at the AGM, that is not an answer to that. So if it is there like that, it is a non-compliance, and secretarial auditor has to qualify his report also accordingly. It is a non-compliance. Yeah.
And sir, even SS4 goes one step further, and it says that if such qualification, reservation, adverse remark, or disclaimer, it is going to have some material adverse impact on the financial statement or the functioning of the company, and the likely impact is also, and of course the corrective measures, whatever we have taken. So that is also required to be discussed.
Correct.
So company has to give a disclosure whether the maintenance of the cost records as specified by the central government is being done as per the requirements or not. If company has issued any sweat equity shares during the year, details of such sweat equity shares is required to be given. So all these details are quite in the details, like, what amount of equity shares has been given as a sweat equity shares, and what was the measures company has find out the people to whom it is to be required to be given. So such details are mentioned in the act, and in those format it is required to be given. Similarly, for the details of money for purchase of its own shares by employees or by the trustees for the benefits of the employees, and if the and whether voting rights are not exercised directly by the employees in respect of such shares to which the scheme relates, details of such details are also required to be given. If there has been any revision in the board's report, the detailed reason for the revision of the financial statement or the board's reports is required to be disclosed in the board's report.
In fact, one more thing also, Sakshi, just to go back to the previous slide. See, if I am not wrong, what Companies Act requires to furnish in the board's report is about issue of securities which are equity in nature, like your sweat equity or your ESOPs or your issue of any other securities. But they're silent about the issue of debt securities. Even if they are convertible also, it's not mandatory if I am not wrong. And as per SS4, it is mandatory. I mean, it is, of course, though the standard is not mandatory as such, but in the SS4, it says that any kind of securities are issued, whether it is a debt security or equity security or quasi-equity, whatever it may be, that is to be, that information should be furnished in the board's report. The reason being, if you find in SS4, there are certain things in all the secretarial standards, it is there. Over and above the Companies Act provisions, they also have, given certain other information to be furnished in the respective documents. The reason for that is that to raise the bar of corporate governance. The answer is, in this particular case, the recommendation is that when you are talking about issue of the equity securities, why not debt security? It is also to be important to know, okay, what sort of debentures, what sort of bonds are in case of any convertible, non-convertible securities are issued. Those are to be also brought to the notice of the stakeholders. Yeah.
One more thing I just wanted to add here, Sudhakar touched upon some time back the state of the company's affairs. SS4 is actually talking about very elaborately and other things and all these things. In one of the case which has actually happened in Chennai, I think Chennai ROC, I think last year only, it was somewhere on 30th of April 24, in a particular company, the state of the company was not at all addressed actually for a period of over 3 years. So they have taken the matter very seriously. The company has been very severely penalized to the tune of 3 lakh rupees per year and 50,000 rupees per director. There were about 3 directors are there, or some 1.5 lakh rupees. That means almost about 4.5 multiplied by 3, 13.5 lakh rupees penalty has been levied. Just not mentioning this. This is the thing. I just thought of bringing it to your notice. Yeah. Yes, Sakshi.
Thank you. Yes.
So in case a company has accepted any money from the director or director of the company or a relative of the director, and at the time of taking that money, the company has to take a declaration in writing that the money is not being given out of the funds, the borrowed funds, or accepting loans or deposit from others. So if company has taken such money, and the details of such acceptance of the funds are required to be given in the board's report. So now section 197 of the Companies Act 2013 requires the details with respect to the remuneration. So the remuneration companies is required to disclose the ratio of remuneration of each director to the median of employees' remuneration. If company has paid any commission to the director, or remuneration or commission to the whole-time director or the managing director of the companies, or the holding company or subsidiary company of such company, then details of such remuneration are also required to be given. Then the listed company is required to give quite a detailed disclosure with respect to the remuneration, which includes the ratio of remuneration of director to the median of employees, the percentage increase in the remuneration of each director, CFO, CEO, or the manager of the company and the company secretary as well in the financial year. The percentage increase in the median remuneration of employees in the financial year, number of permanent employees on the rolls of the company, average percentile increase made in the salaries of the employees other than the managerial personnel in comparison to the percentile increase in the managerial remuneration, and the justification for the same if there is a huge gap between the same, and an affirmation that the remuneration is as per the remuneration policy of the company. Also, there are certain requirements with respect to the remuneration, I would say, which is required to be given in quite in detail, which requires that the details of the top 10 employees of the company, and there are certain thresholds which has been mentioned in the act. So companies are required to follow those thresholds and disclose the details in the board's reports accordingly. Now we will discuss about the requirements which has been mentioned under the Secretarial Standard 4, and though it is recommendatory, however, majority of things are also covered in the rules. So this is somewhere required to be followed by the company. The financial highlights of the company, which includes the company's performance, including its turnover, profit before tax, profit after tax, earning per share, and other key financial indicators for the year. Then change in the nature of the business in case during the year under review, if there has been any change which is in the nature of the business, then the particular change is required to be given in the board's report. The disclosure with respect to the amount of dividend recommended or declared during the year. And if the company has a dividend distribution policy, such dividend distribution policy requires to be given as part of the board's report as an attachment. If any amount is being carried to reserve or proposed to be carried out to the reserve, then the disclosure of that reserve specifying the nature and its purpose required to be given. If there has been any material changes and the commitments, then such material changes are required to be reported in the board's report. The details of subsidiaries, joint ventures, and the associate companies of the company which has been giving the board's reports are required to be given in the board's report. If the internal financial controls are adequate and operating effectively or not, such confirmation are also required to be given in the board's report. The disclosure with respect to deposits accepted during year, unpaid or unclaimed deposits, defaults, and compliance with Chapter 5th of the Companies Act 2013 is required to be given in the board's report. Also, along with this, in case the details of deposits which are not in compliance with the requirements of Chapter 5th of the Act are also required to be given. The details of the auditors of the company is required to be given. Name of the stat auditors, cost auditors, secretarial auditors, and the internal auditors. If there has been any observation by the auditors or the qualifications made in their reports, along with the explanation or comments of the board, is required to be given in the board's report. The composition of the major committees of the board, which is Audit Committee, NRC, CSR, or RMC if applicable, details of and Stakeholders Committee for the listed companies. Details of such committees, their meetings happened during the previous year, and the major recommendations accepted by the board. Such details are required to be given. Then details of the directors. Sorry.
I think when you are talking about the committee, I think Sudhakar and Anshul can correct me. We need to give the details of only the mandatory committee which are applicable. If the company has done any voluntary committee, those details need not be given. Am I correct?
Yeah.
Then
Go ahead,
the
Sach.
details of directors and KMP are required to be given in case there has been any changes during the year in the directors or the KMPs. Such changes, appointment, resignation, retirement, or reappointment for that matter, are required to be given. And the fact of resignation by the directors during the year are also required to be mentioned in the director's report. So the independence, we have already discussed that the declaration of independence of the independent director is required to be given. However, the details of the familiarization program conducted for the independent directors, which is mandatory for the listed entities, details of such program is also be required to be given in the board's report, and the web link is required where the details mentioned on the website of the company. If the CSR provisions are applicable on the company, then they are required to disclose the outline of the CSR policy, the composition of the committee, details of the projects which has been happening, and it becomes the annexure to the board's report, all the details of the CSR projects which has been handled by the company during the year. The company is required to give the confirmation with respect to the establishment of a vigil mechanism or the whistleblower policy of the in the company, and a disclosure is required to be given that its functioning is proper and accessibility is given to all the employees of the company to the chairperson of the audit committee. With respect to the risk management policy, the development and implementation of the risk management policy for the company, identifying the key business risks, such disclosure are also required to be given. So employee related particulars are required to be disclosed as per Rule 5 of the company's appointment and remuneration of the managerial personnel rules 2014. It includes the name of top 10 paid employees and the ratio of remuneration to the directors. This disclosure is also required quite in detail in the board's report, which includes, as we've discussed, there is a particular threshold. So that disclosure as per that threshold is required to be given, and the details of the employees with respect to their remuneration, their designation, their age, and qualification is required to be mentioned.
So, Dagar, I got one question here actually. If you remember, in 1956 Act, we had one provision that employee details, etc., which are given to be in excess of the limit or their remuneration is drawing. They used to write in the board, although this board report forms part of this thing, etc., and other thing and all, it is not being published, or on demand it will be supplied or something like that. There was a way because they don't want to disclose their remuneration detail, etc. Is there any such things are there in the 2013 Act, or is it nothing?
It is there.
It is there.
It is there. That's why major companies, the large companies, they don't attach the remuneration of the employees to the board's report. They put a paragraph in the board's report. If you see that, they will also mention that if in case any shareholder requires that, they may write to the company and they provide that also. And why, under what, in fact, there is a query also in the chat box that the top 10 employees remuneration details are to be given apart from the employee particulars. Some companies are not giving that. In fact, recently one of our client asked me the same question, and okay, sir, Reliance is not giving that. I said, when a company like Reliance is not giving that, means you have to refer, you have to read the board's report very minutely. Why they are not giving? If you see the Reliance board's report, they have given the reason also for that there. So I want the participants to please go through the director's report, I mean the board's report of RIL minutely. You will find a solution there only. In fact, earlier I used to explain all these things, but these days I thought, let the people do some kind of a homework. I'm not giving everything, on the platter to them. Some people have to do some hard work. This way, in the WhatsApps also, whenever people ask me some questions, I say, please refer to so and so. At least the source, I'm giving it. Rest you have to do it yourself. In this case also, the answer to that, if RIL is not giving, that doesn't mean RIL is not complying with that. RIL is also giving a reason for that. What is that reason? You have to read it minutely. After that, you have to do your own research. Is it so? If not, then write to the company secretary of RIL and question them by how it is not there, how it is, and all those things. And similarly, in case of somebody told me about the dividend waiver also. Can the dividend be waived by the shareholders? Answer is it is not clear in the act. then how to do it? And then they asked me the question, sir, Reliance has waived it. That point of time, you were there in Reliance only. I said, yes. That doesn't mean we have complied or non-complied. We have taken a call. Based on that, we have did the corporate action. So what I'm trying to say to the participants is never ever copy. If somebody is doing that, I will also do that. That somebody, under what circumstances they are doing it, under what sort of backups they are doing it, that you have to be very clear. Tomorrow, by chance, if you got caught and the what's called regulation, the regulatory or statutory authorities are asking you to give the explanation, you can't say that so and so company has done, so I am also doing that. That is not an answer for that. Nobody will buy that argument. Okay.
So if there are any significant or material orders passed by the regulators, courts, or tribunals impacting the going concern status or the future operations of the company, details of such orders are also required to be reported in the board's report.
In fact, here also, what is the significant order? What is the material order? So there is nowhere you will find the definitions for that. For that, you have to refer to the SS4 and the guidance note. Every word of the standard has been explained, the rationale as well as the clarification or explanation, whatever we may call it as, it has been given very clearly in the guidance note. That's why right from the 2015 onwards, we are standing on the rooftop and saying that please go through these guidance notes, please go through these standards, whether they are mandatory or not mandatory. At least give one reading to that. Just like Bhagavad Gita, whenever you are in a problem, just refer to the Gita, you will find a solution. And if you say that I cannot understand Bhagavad Gita, then only God even can't help you. Same is the case here also. When you are a professional, when you are facing a problem, if you know that there is a standard, there is a guidance note, please refer to that. Why you have to write to WhatsApp? The most what's called dangerous thing, according to me, is seeking some guidance on the WhatsApp groups, with all due regards to everybody.
Not only
Because
WhatsApp, on Google. Answer is on Google.
Nowadays, unfortunately, this chat GPT, whatnot, and all are coming here. At the end of the day, first and foremost thing is what is there in published by the institute. See, institute is taking an enormous responsibility while publishing any document, while constituting any committee, right? So why can't we take the help from that first and then others? The way the things are happening, the way the statutory authorities are what's called dealing with the professionals, the amount of empowerment what they're giving to the profession, there are no excuses for any kind of lapses anywhere. So please tighten our seatbelts, because the way the regulatory authorities are imposing the penal provisions and all, Bala is writing virtually every alternate day an article on that, these things. In fact, if sometimes, the way the role of the company secretary is emerging these days, I really thank my stars, I could hang my boots. It's really a very serious role, whether you are in practice or you are in service. I'm not scaring the people. I'm not scaring, but I'm trying to bring the seriousness on the table. Because especially, just 1 minute, one more moment, I will take Bala. Especially the youngsters, with all due regards to your people, the amount of seriousness, the amount of what's called time you have to spend to acquire knowledge, it is not happening. And several senior company secretaries, several senior professionals rather, are worried about this thing only. But no doubt about it, there are very bright people are also there. So wherever it is, I always request, if the people who have put on 10 years plus service, please push the youngsters, because these are the people who are the torchbearers of this profession tomorrow. So let us inculcate that habits in them about reading case laws, about reading the interpretations, not copy pasting the things. No doubt about it. Time is not there. Again, the same thing. If you ask the people, they say, sir, there is no time. My only standard answer to that, I give it to myself also and give it to others also. when our Prime Minister Narendra Modi and my chairman, Mr. Mukesh Ambani, got the 24 hours, we also got the same 24 hours. When one can run the country and another can run the conglomerate, can't we run ourselves? Think about it. Sorry, I just got digressed a bit. Yes,
Sadagar,
Sakshi.
Sadagar, you rightly touched upon about the youngsters. Really speaking, many youngsters are not even aware of the publication of our institute, which is a very sorry state of affairs. When we talk to them, oh, is it? Where it is available? How can I get it? This is sort of the things which is coming, which is a very sorry state of the affair. Because every publication, every chartered secretary institute is actually bringing out, even mails are actually being sent, we can register, we are getting it and other things and all those things. But unfortunately, that is not happening, which is very, very sorry. Because as you rightly said, the secretarial standard has put lot of efforts in not only turning out to the secretarial standard, but also the excellent guidance note actually. So that is what it is actually happening.
But Bala, that is the reason actually these days, I started the people like Anshul who are neither too young nor too old. They are in the middle age. So these are the people who got the responsibility because people can point with them. Because otherwise they may say, yeah, these oldies can say always like this, or like घर में माँ बाप कहते हैं, profession में साले ये लोग कहते हैं, इसका कब तक सुनते रहेंगे? But now it is the responsibility of people like you, Anshul, you, Tirpal, and all these people who are out there of the middle-aged people, like who are in the between 35 to 45. You have to push the people wherever you are going and delivering a lecture. Please do spend about 5-10 minutes about the profession and give some kind of a pep talk to the budding members also, which is very much required according to me. I'm sure you will agree with me, Anshul.
Certainly, sir. Certainly.
Sudhagar, on 5th of June only, I written an article on the board report on the consequences. I listed down almost about 20 case laws on that. What are the things which have gone wrong? What are the actually adjudication? What are the fine amount of the penalty? Because I thought that is relevant now since we are taking the thing which just got published on 5th of June, which I almost listed down something about 20 and odd cases of the different type. So that is why I'm able to say this. What are the things which is actually going? Yeah. People who are interested, they can go through it. It is there in the SEBI corporate laws of taxmen.
Yeah. Yes, Sakshi. Go ahead.
So the details of annual evaluation of the board and its committees are required to be given. Then the sexual harassment compliance, the disclosure related to the number of the complaints filed, the number of complaints disposed of, and the pending complaints under sexual harassment of women at workplace, prevention, prohibition, and redressal Act 2013. Also, the details of the committee, POSH committee with respect to the same are also required to be given. Do you want to say something, sir?
So, with regard to this POSH compliances disclosure, this May 30 notification brought in these three things, which was not there earlier, but it was there in the SS4, like the number of complaints received in the year, dispose of, or cases pending at the end of the year. This was not there in the rules, but it was there in SS4. But now it is now it has become the part of rules also. Why this 30th May notification, the company's accounts rules is now amended and this is added. Apart from this, there is another disclosure which is added with regard to the statement by the company with respect to the compliance with the provisions of the Maternity Benefit Act. So that is also now added in the company's account rules.
So,
in fact, I used to say quite a number of times that whatever is not there in the act, if it is there in the standards, it is a matter of time before it becomes an act. I will give an example in SS3. If you see a company cannot declare dividend if it defaults in the deposits, even if it default in the interest on the deposits also, till the time the same is rectified. But act is silent about if you declare dividend and you don't pay the dividend. Next year, can you declare dividend? Answer is yes, because it is not prohibited. If you default in repayment of debentures, which are to be redeemed, and you are not paid interest on that, there is no prohibition. Still, you can declare dividend. The preference shares which are to be redeemed, you are defaulted, no problem. But if you see the SS3, we have brought all these things. If there is a default in any of these things, the dividend is not to be declared or recommended. But unfortunately, in the Act, except the deposits, rest of the things defaults are allowed. So might be, sometimes what happens is it comes to the notice of the regulator at a later stage, then they will bring it. But one should appreciate that at least in the ICSI, we could bring these things, these kind of small, what's called, you may call it that the lapses, which were there in the Act, at least we could try to tie up in the standards.
In fact,
Yeah.
regulator is becoming very aggressive nowadays. It is not only the company and the director, it is also KMPs. As you rightly mentioned, in one of the Porsche case, the non-disclosure of the internal constitution of the committee, it is not only the company and the director, and also CFO and CS. They have been actually penalized. I think the ROC Bangalore has passed an order. That is also another thing. So we need to be very, very careful. That's
See,
the thing.
Bala, always, the first line of defense is the KMP. It is not the directors, it is the first line of defense is always the KMPs only. It is the
If
company secretary's responsibility.
If KMPs are there, then yes.
People are asking.
If KMPs are there, then they are not officer in defense.
They are saying,
Yeah.
I'm only a CFO. How I'm concerned with the Porsche? That is what the KMP is asking there. But anyway, ROC did not buy that agreement. Yeah.
There's exactly, we as a firm was believing that, when we do audit, that not only company law and the security law, but HR, admin law, and other compliance need to be worked out because we comment on the, compliance system.
System and processes.
With the size and operation, that all required. And what the authority is now looking is, we have to see that financial and non-financial. Financial in charge is CFO, non-financial compliance governance, CS, the another important KFP is in charge. And if you see over the period now, each and every department CS is touching, and each and every department will know CS. Look at the sexual harassment, look at the remuneration, everything you require. Look at the safety, your ESG, BRSR, every department you will touch, and RPT, of course. Yeah, please, Sash, go ahead.
The compliance with respect to secretarial standards, so the company has to give a confirmation in the board's report that they have complied with the applicable secretarial standards issued by ICSI. So the mandatory ones are right now SS1 and SS2. So the mandatory compliance of them is required to be given.
Again, Sakshi. See, Bala, the answer to your question is here only. See, the directors have to give an affirmation in the board's report that the company has complied with SS1 and 2. And in fact, several directors might not even be knowing what is SS1 and 2. Because when I go to the IOD this thing as a faculty, several times I ask them this question, are you aware of SS1 and 2? Which they are not so. So as a director, what happens is that these days he cannot take the directorship as a vocation. They have to do some kind of a homework. They need to understand the things. If not in depth, at least fair amount of an idea, they should have it. They have to read the board's report, sit with the compliance officer, understand the things by what I am giving it in the board's report. Director's responsibility statement. The director is supposed to understand what is my responsibility statement I am giving it. So it is not only for KMPs, it is only even for directors also. They need to understand. That's why in several forums I have mentioned this thing. The days are gone where compliance officers or the KMPs can comply with the things in isolation. They have to sensitize the organization across wherever it is required. And also, normally we used to have the delegation of power matrix, DOP we normally call it as. It is a high time for the companies to also have a responsibility matrix in the organizations stating that who is responsible for what. And the people have to understand that what is my core responsibility, what is my primary responsibility, and what is my secondary responsibility. That is very important. It is. The time has come that all the organizations, they need to have this kind of responsibility matrix to be developed. Even the director should know what is my role as a director. Because all the directors might not be having the same role. If I am an executive director, my role is different. If I am an independent director, my role is different. And if I am a non-executive, non-independent director, my role is different. So I need to understand what is the difference and who will explain that to me. For that, what happens is simply attending the board meetings is not sufficient. The directors, and especially independent directors, spend some time with the company secretaries and understand these kind of things. They have to be inquisitive enough to understand their role. Yeah.
Sir, with the due respect to you, even much before 2013, the company's institute has brought on the secretarial standard. I think they brought a consolidated book which is considered.
Yeah, 10 standards were there. SS1 to SS10, they were there.
I think Mr. Bala, there is a issue with her.
10 secretarial standard in a booklet. I have purchased that book, like that is number one. Number two is I have actually, when I talked to some of the people, they said, what is this seal register? What you are talking, we are not aware. That is what it has actually happened. So it is actually a company secretary has to actually make aware of the directors about the existence of the secretarial standard. They have to give them, they have to operate them. That is what it is required actually. Yeah.
Yeah, Sakshi.
So if there are any additional information which is mandated by either SEBI or any other regulator, those information are also required to be given in the board's report. And if company feels there are any there's certain information which could be necessary for the stakeholders, or the board consider that the certain information is material or relevant for the transparent governance of the company, then such disclosure should also be given in the board's report. Now there are certain additional requirements which is been given by the listed entities in their board's report as per SEBI LODR. So they have to comply with, yes, Companies Act rules and everything. Certain disclosures are in the detailed form. The first is the details of related party transactions. So the complete disclosure with respect to material related party transaction should be given in the board's report by the listed entities. There is a format which has been given, so the disclosure must be given in that particular formats. Now the new industry forum ISF rules are also mandatory, so the disclosure should also be given according to that. The details should include the details as per like nature and the value of the transactions, name of the related parties, if the transaction has been made on a arm's length basis or not, if there is an approval of audit committee and shareholders, if required, is been taken for that or not. The such disclosures are required to be given with respect to related party transactions, and the web link of the policies on the related party transactions and the policy for determining material subsidiaries. Such web links of those policies are also required to be given in the board's report. Then the disclosure on non-compliance and penalties. So if the company has not complied with any LODR regulations or the conditions which has been mentioned by the SEBI or any other regulator, such disclosure should be given of that particular non-compliance. And if there has been any penalties which has been imposed by SEBI or stock exchanges or any other statutory authority, the details of such penalty should be given in the board's report. The companies are required to give a confirmation, then their 100% of the promoter and the promoter group shareholding is in the dematerialized form. And the annual confirmation with respect to the compliance with the applicable requirements of the regulations of the LODR should be given, that the company is complying with all the applicable regulations, and the required material disclosure has been given in the board report. Details of stakeholder grievance committee, because it is applicable only on the listed company. So its composition, details, and the designation of the compliance officer is also required to be given. Along with that, the number of shareholder complaints received during the year, the complaints resolved during the year to the satisfaction of the shareholders, and the number of pending complaints at the end of the financial year should be given. The general information of the company is required to be given, which includes but not restricted to, I would say, is the dividend payment date, the confirmation with respect to the listing fees, that the company has paid its listing fees or not, details of RTA or distribution of the shareholding of the company. The if company has multiple plants, then the location of all those plants, the credit ratings which has been received by the company, and other information which has been mentioned in the SEBI LODR are required to be given by the company in the board's report. The details of the general meetings are also required to be given of the last three general meetings conducted by the company, the location and the time of those meetings, whether any special resolutions were passed in those previous three annual general meetings. If those and any special resolution was passed through postal ballot, details of such postal ballot is also required to be given. Who conducted the postal ballot exercise, whether any special resolution is proposed to be conducted through postal ballot, and the procedure of the postal ballot followed by the company is required to be, all such disclosures are required to be given in the board's report by the listed entity. The means of communication to the shareholders or the stakeholders are also required to be mentioned by the listed entity, which includes the details of the quarterly results, newspapers wherein the company generally give its publications, the website details of the company where all the policies and other information of the company is published. If company has given any news releases, then details of such news releases by the company and the presentations made by the company to its institutional investors, then all those communications, how it has been given to the respective people, such details should be given by the company in the board's report. Then the details of remuneration of the directors, that all pecuniary relationship or the transactions by the non-executive directors. Then the company's criteria of making payments to non-executive directors should be given in the board's report, or if it is available on the website of the company, then the web link of the same should be given in the board's report. In addition to the disclosure required in the Companies Act, the following disclosure with respect to the payments to the NEDs also be given. So all elements of remuneration to the individual directors, including its salary or any kinds of benefits, stock options, pensions, are required to be given. The details of the fixed component and the variable component in their remuneration is required to be given. Proper bifurcation of the same is to be given. If there is any service contract, notice period, severance fees, any stock option details which has been given to the directors or issued at discount to the directors should be given in the details of the remuneration to such directors. If the company has raised funds through the preferential allotment or the QIP, then the details of the utilization of such funds raised should be given in the board's report. If there has been any recommendation made by the committee, which is mandatorily required to be recommended by the committee to the board, and if the board has not accepted any of such recommendation of its committees, the disclosure with respect to the same, along with the valid reason why such recommendations were not accepted by the board, to be given in the board's report. Total fees of paid by the company for the services and its subsidiaries for the services of the statutory auditors should be given in the board's report. Details of senior management and its changes during the year should also be included, and disclosure with respect to demat suspense account or unclaimed suspend account and the changes in that particular year are required to be given in case if any shareholders who has approached the listed entity for transfer of shares from the suspense account during the year, or the number of shares which were transferred from the suspense account during the year, and the details of the shareholders and the outstanding shares in the suspense account lying at the end of the financial year, such all details are required to be given in the board's report. So there are certain annexures which are required to be made along with the board's report. We have already discussed, so we'll touch upon those as well. First is the management discussion and analysis, MD&A. So this is a annexure to the board report which provides an explanation of the financial performance of the company, the industry trends and the risk and the opportunities of the significant developments in the company. It typically involves the industry structure and development, opportunities and threats, the segment wise and the product wise performance of the company during the year, and if there are any risk or concerns with respect to the performance of the company, the internal control systems, financial performance, human resource development, or if there has been any change in the key financial ratios of the company during the year. Such disclosures are required to be given in MD&A, and this MD&A forms as part of the board report as its annexure.
That in fact, I don't agree with this particular thing that management and discussion analysis need not be a part of the board's report, because nowhere it is mentioned that it is to be a part of the board's report. If you make it as a part of the board's report, you may be in trouble, because in management discussion and analysis, people do a lot of things about the what's called as the domestic industrial scenario, international scenario, all these things. So as I told, board report is a legal document. Unless until it is imperative, don't make the annexures. Unless until it is required, don't make annexures of everything and anything. So according to me, management discussion and analysis is not to be annexed to the board's report. It is to be given in the annual report. There is a difference between the two. And similarly, some companies, what they do is, if you observe, corporate governance report is attached to the board's report. Because in the listing regulations, there is a kind of slightest ambiguity that at one place it gives an impression that CG report is to be attached to the board's report. So CG report, even if you attach to the board's report, there is no problem, because CG report only you are furnishing the information. It is a collation of information, putting into the format, whatever has been given in the listing regulations. Whereas in case of MD&A, it is not so. So one has to be careful about this. At the same point of time, I will also take this opportunity that some people think that annexures, the signing of the annexures, they think that because it is an annexure to the board's report, in the board's report, the reference has been given and the board report is being signed, annexures need not be signed. Answer is no. Annexures are to be signed by those people who are signing the board's report, except one report, that is CSR annual report. That is to be signed by any one director, executive director, if I am not wrong, and the chairman of the CSR committee. They have to sign that. The rest of the annexures are concerned, they are to be signed by the same people who are signing the board's report.
Not only that, along with the DIN number. Along with the DIN number. If that is missing also, there is a problem. Yeah.
It is specifically actually mentioned in section itself that the board reports and its annexures shall be signed by a chairperson of the company if he is authorized, or wherever he is not so authorized shall be signed by two directors, one of whom shall be managing director or by other director. So it is specifically mentioned in the, so by its annexure is a very important word, it's, as you rightly said.
Yes,
Then corporate governance report. So it is mandatory for the top 1,000 listed entities by its market cap and certain others. So CG report includes the majority, the composition of the boards and its mandatory committees, attendance, the details of remuneration, affirmation on compliance with the governance codes, details of the related party transactions, CEO and CFO certificates, disclosure of compliance with the discretionary governance requirements, and there is a certificate on corporate governance which has been issued by the practicing company secretary and should be annexed to the annual report, confirming that the company has complied with the corporate governance conditions as per SEBI LOTR. Then CSR report. So section 135 mandates CSR activities by the company, and the board report should include a report detailing the CSR policy, its committee composition, expenditure which has been done by the company, and the projects undertaken during the year for the CSR activities. If company fails to spend the complete CSR amount, they should specify the reason for not spending that particular amount during the year. Then BRSR report, business responsibility and sustainability report, which is also applicable to top 1,000 listed entities on the basis of market cap. So in this report, the disclosure is requirement given on the company's environment, social and governance initiatives. This replaces the earlier BRR report, and the format for BRSR report has been prescribed by the SEBI, so it should be given in that particular format only. CEO and CFO certificates, wherein the CEO and the CFO of the company certifies that the financial statements of the company do not contain any false or the misleading statements, and they have effective internal controls in the company, and they have disclosed that all the significant deficiencies in design or operation of internal controls. This certificate of CEO and CFO is required to be included in the annual report. Dividend distribution policy of the company. As per its applicability, the policy of dividend distribution should be disclosed in the annual report on the company's website. And if the companies are not giving it in the board's report, then at least the reference of this particular disclosure should be given. Then the secretarial audit report is required to be given in form MR3 and should be annexed to the board's report. And the board of directors should also explain if there has been any qualification or observation made or other remarks made by the auditors, TCS, then clarification with respect to the same should be given by the board of directors in their report. As we've discussed earlier, the companies are required to give the directors responsibility statements, to which the directors are required to confirm to the stakeholders that in preparation of the annual accounts, the whatever the applicable accounting standards are being followed, and there are no non-compliance with respect to the same. And directors have selected the accounting policies and applied them consistently, and the proper and sufficient care has been taken by the directors for the maintenance of the adequate accounting records in accordance with the provisions of the Act. The accounts of the company have been prepared on the going concern basis, and the company has laid down internal financial controls, and such controls are adequate and operating efficiently. And the company has devised a proper system to ensure that with the to ensure compliance with the applicable laws. And such systems are operating effectively in the company. The directors of the company are required to give such confirmation in the director's report. As we have already discussed, the board's report and the financial statements of the company are required to be signed by the chairperson of the company or any other two directors. One of them should be MD. So here we'll add that board's report along with all its annexures should be signed by the required people, and this board report should be filed with ROC along with its required annexures within 30 days of the AGM. If the companies fail to comply with the requirement of this section 134 of Companies Act 2013 with respect to the board's report, then they should be punishable with the fine of rupees not less than 50,000, but which may go up to rupees 25 lakhs. And every officer in default would be punishable with imprisonment up to 3 years or fine of rupees 50,000 to rupees 5 lakh rupees, or it can be both as well. Now, to understand the importance.
I think, Sakshi, that section with regard to the penal provisions which you mentioned, I think it is now decriminalized. It is now penalized with penalty only of 3 lakh rupees, and every officer of the company who is in default shall be liable to the penalty of 50,000 rupees. That what you mentioned about the fine, it was before decriminalization.
That is gone now, actually.
Yeah.
After the adjudication process.
That's the reason Bala sir could write so many articles on adjudication of board's report.
So there are certain case laws which has been there in the public domain with respect to the non-compliance of Section 134. So in one of the cases where the company was required to give the Form AOC2 as the attachment to the board report, the company fails to do so, and the ROC Hyderabad imposed the penalty of rupees 3 lakhs on the company and rupees 50,000 on two of its director, totaling to the penalty of rupees 4 lakh on the company. And similarly, in with regards to the disclosure under Section 134, subsection 3, clause H, wherein the company failed to disclose the RPT for 3 years in its board report, though it had the RPTs in the company, the ROC Chennai issued total penalty of rupees 13.50 lakhs on the company. And I guess Bala sir has already discussed about this case that the company did not give the disclosure or the statement on the constitution of internal complaints committee under POSH Act in its report. On that, the ROC Bangalore imposed a penalty of rupees 6 lakhs on the company and 1 lakh each on the CS, CFO, and MD of the company, total to amount of rupees 9 lakhs. And the best part about this case laws is that out of these three, two companies over here are the private limited companies. So a lot of times it happens that the compliances are not taken at a very strictly at the private limited companies. They do not follow these requirements. So the heavy penalties are being imposed by ROC on the private limited companies as well. So it is very important for the private limited companies as well to take care of the provisions of the Act while making the board's report. And thank you so much. This is it for the presentation.
Great. It over at the right time. Yeah. Mr. Bala, we can start taking questions.
Before taking question, madam, some of the notable points which I want to highlight.
Sure.
With regard to the few of the things which we need to take care this year onwards. Now there is a specific proviso which is added in the Rule 12 after sub Rule 1B in companies account rules, which says that a copy of the signed financial statement duly authenticated as per 134 of the Act, including board's report, auditors' reports, and other document in PDF format shall also be attached with the XBRL form. So this year onwards, we need to do this particular compliance also as far as our annual filing is concerned. Further, there are some of the modification in form AOC2 also, which is the disclosure of the RPTs not at arm's length and the material RPTs. And now because as we earlier it was mentioned about copying and pasting, so I think there is a small modification in the forms. First of all, there is a new column is added for the identification number of the related party. So it may be a corporate identity number, that foreign company registration number, LLP number, then the permanent account number. Even for individual, they even the mention about the passport number also. If we have, say, some foreigner who is not having any PAN but having the passport and it is a related party, so we need to give his passport number also in AOC2. Then the name and nature of relationship. It was earlier a single column, name and nature of relationship with the related party. Now it is break into the two columns. We have to mention the related party separately and the nature separately. Thirdly, the silent feature, which was there in AOC4, the disclosure says that the before amendment it was silent feature or silent terms of contracts of the arrangement or transaction, including the value. Now the statement is changed that silent terms of the contracts or arrangement of the transaction, including actual and expected contractual amount. So and SRN of MGT 14 is also required to be given in AOC4. So these are some of the changes which is brought to the AOC2 format, which is applicable on and after 14th of July. And So this I wanted to highlight some of the important changes going to be there, and rest changes I've already mentioned in. So we can now take the questions if or any other thing you want to add.
Yeah, just before taking the questions, one thing which Sakshi has not dealt with is the revision of the board's report. That several times it may so happen that we ourselves realize that the final, I mean, the board's report, which was adopted along with the financials, there is some kind of a slip-ups have taken place. So before ROC initiates any action, suo motu voluntarily, you can approach the tribunal and you can get that permission or authority to revise your board's report. This revision, even not only the board's report, even financial statements also you can do it. This can be done only once in a year. And similarly, this can be done only previous 3-year board report or financials, not for in perpetuity it is. Now the question comes that when I am revising the board's report, how to deal with that? When you are revising the board's report, whether that is to be simply filed with the ROC or it needs to be again approved by and adopted by the shareholders. Similarly, whether that particular revision is to be mentioned in the current year's board's report, how it is to be dealt with in the current year board report. Answers to this, please refer to the guidance note. Very elaborately, we have discussed this particular process. This is a very, very important thing, which you will not get in any of the rules or in the act. You can get only in the SS4 and its guidance note. Please refer to that. Thank you.
Yeah, Mr. Bala. You are on mute, Mr. Bala.
Pursuant to Rule 5.2 of the Company's Appointment and Remuneration of the Managerial Personnel Rule 2014, whether the remuneration of the board report needs to be disclosed on gross amount of CTC, whether on the cash basis, on accrual basis. Further, whether remuneration disclosure include commission on profit reimbursement of the expenses, as how to disclose variable pay, as variable pay is actually for the financial year will be decided and paid in the next financial year.
Yeah, so my view to this particular portion is that as far as reimbursement of expenses, it will not come. But as far as other remuneration which the company is giving to the employee, the year in which you are paying the taxes on that particular amount, so variable pay for the last year paid in this particular year. So say for the financial year 24-25, the variable pay will be paid in financial year 25-26. So it should form part of the board's report of the year 25-26, not of the previous year.
It has to dealt with the way it has been dealt with in the financial statements. Financial statements, you have to maintain it on accrual basis. Whatever the variable pay, if they have taken it on accrual basis, then obviously you have to give the figures also in alignment with the financial statements in the board's report.
Except for the annual report, MCT 9 is mandatory. I think we discussed that actually. Proviso to section 178(4). Inter alia state that as the salient feature of the policy and changes therein, if any, along with the web address of the policy, if any, shall disclose the board reports.
Yeah, I think Sakshi has mentioned that in her presentation that the the policy summary has to be given along with the web link of the entire report. So that is already there.
Okay. In the formation of the post committee mandatory, every workshop of the company where more than 10 employees are employee, if these only male employees are there, how to actually comply with the requirement of the composition of the committee?
I think it's not my subject. Madam is expert in this subject. She can talk on that. But my understanding says that the POSH Act is applicable to the establishment. It is not nothing to do with the male or female employee at the workplace. But it is establishment. Even any visitor, as a female visitor is coming to the your office, so that also needs to be taken care of with this particular act. So, Madam, you can speak better on this.
No, it's perfect. That is the answer.
Yeah.
Yeah, you rightly touched upon this. It is applicable to all the organizations, irrespective of male or female, because you rightly touched upon the point. Does risk management applicable to SME companies?
And this question I can answer whether applicable or not, but it is something beyond law itself. Risk management even is to be done by smallest private company also, as far as part of their business. I don't think that without managing the risk you can run any business. So it should not be taken as a tick mark exercise. Rather, it should be there.
For private companies, if certain clauses are not applicable, like CSR maintenance of the cost record, statement of the annual performance, etc., will we have to have the mention and say that it is not applicable, or can we skip those clauses?
See, if you'll ask me this particular question, I would always prefer to give a remark whether it is applicable or not. If it is not applicable, still I would like to give a statement that this is not applicable. To have the complete disclosures, and again I'm going back to the board's report extract, which is going to be mandatory now. So in that also a lot of information we need to give. So it is there in the format itself. So if it is not applicable, we have to mention that not applicable. So I think better way of doing it, but both the views can be taken. So Dagar sir can explain better, I believe.
Yeah, I see that. And the old act, it was there, but in the new act, it is always better. If you see, if one can see the Reliance board report also. At the end of the things, we used to normally give all the clauses which are
Not
not applicable to as far as the board's report is concerned. It's better to, I mean, rather it is advisable to do that thing.
Yeah, that is a better way of doing it
Because
in order to
134
be safe.
clearly says that on that particular aspects in the board's report, you need to deal with that. So it is, you have to do it.
Is the board required to comment in its report or emphasis of the opinion by auditors?
I feel it is not a qualification, adverse remark, disclaimer, or observation. Sometimes what happens that due to certain reasons we need to follow a different kind of practice for preparation of the financial statement. And to highlight that particular portion, auditor used to mention. Say, I'll give you one particular example, which exactly happened with me also. One of the one of the order of the NCLT, whereby two companies, one business got demerged, and in that process the goodwill was created. And in accounting standard, there is a different treatment of goodwill is given, whereas the NCLT order was saying that the goodwill should be apportioned within a period of 10 years. So every year you need to take the hit on your P&L. So now accounting standard is saying something, NCLT order is saying something. So auditor used to mention, so it's not a qualification, but auditor used to mention that since there is an NCLT order, and because of this, the goodwill treatment is not done as per the accounting standard. Then we went back to NCLT after 2-3 years and asked NCLT to rectify or make the modification in the order, which NCLT did that. And NCLT after mention in its order that as per the applicable accounting standard. So in such a scenario, this type of things may happen. But at the same time, I will also make a cautionary remark that the emphasis of matter should not replace the qualification, or means by using some kind of different kind of wordings and everything. It should not be replaced replace the qualification or adverse remark. It should be used cautiously, as I mentioned.
You rightly said, actually,
According to me, auditor should not give these kind of things in his report. Anything he gives in the report, that 4 things, it may fall in that either observation, adversary remark, qualification, or whatever the thing is. If so, it is whatever the auditor wants to say, he can say that in the notes to accounts, on which management need not revert. But anything other than that in the auditor's report, if anything is there, that is not a clean report. The board has to give that whatever the reason for that.
Energy related reporting should have been a minimum limit of the conservation of the companies should report above certain limits of the consumption. UK large companies have actually reporting required for energy consumption above 40,000 kWh.
Okay, it's
I
more
don't think,
suggestion actually. It's more
yeah,
suggestion as far as Indian law is concerned. There is no limit is given here.
yeah, correct. Because we don't have any limit, we'll have to go by that. Okay. Emphasis of matter, that's what you talked about it. Yeah. If we can discuss independent directors' role in the boardroom.
Yeah,
Requires a webinar separately.
yeah.
Okay. Equity share are not issued during the year. Shall we need to mention about share capital, including authorized, issued, subscribed, and paid up capital?
I didn't the question actually. What is the
If the equity share not issued during the year, should we have to mention about the share capital, including authorized, issue, subscribed, and paid up capital?
where in which document? It depends on the financial statement. Yes, it is to be mentioned. Annual return, yes, it is to be mentioned. But board's report is concerned, I don't think it's needed to be.
Yeah, correct. Board report, it is not coming actually. Board report, it is only event which is actually happening, but it is said to come only in the notes to accounts, I think. Yeah. Out of the two independent directors, one of them actually resigned from the
This
first
is
quarter.
not regarding the board's report, it is regarding validity of committee meeting, not on the
Okay.
topic. So, no.
Okay.
Sorry,
In the board,
participants, we'll take the questions pertaining to the topic only, please.
okay. In the board report, for a SME listed company, what can be actually excluded in comparison of the companies listed in the main board?
I think Sakshi's presentation is already there. So giving the distinction that what is to be done and what is not to be done, and of course followed by SS4 and guidance note can give you this distinction.
Whether details of the top 10 employees are actually mandatory. Some top companies are not giving. I think we discussed this actually.
Yeah.
Top 10 employees terms of the commencement is required to be annexed with the report of unlisted company, even though most of the employees' salary are less than the threshold of 1.02 crores.
I think that rule does not apply to the unlisted company, to my knowledge. So therefore, this details is not required to be given by unlisted companies.
Okay, you can write to the company detailed on employee that you already discussed. Whether the point pertaining to the internal financial control with reference to the financial statement is mandatory for small and non-small companies. Whether all company needs to adopt a risk management policy. I think that you answered.
Risk
But the
management
first,
policy, I have already answered.
yeah.
As far as direct internal financial control piece is concerned, which is the part of the director responsibility statement, that applies to only, that disclosure applies only to listed companies, where the directors are required to mention that they have laid down the internal financial control to be followed by the company, and that such internal financial control are adequate and were operating effectively during this financial year. And it is further explained that there has to be some policy and procedure for orderly and efficient conduct of business, and the company has followed that particular policy. And then there is a policy for safeguarding of the company's asset, prevention and detection of the fraud and error, the accuracy and completeness of accounting records, and timely preparation of reliable financial statements. So these put together are the internal financial control. As far as director responsibility statement is concerned, applicable to listed company only.
Can we get the PPT? PPT is not generally disclosed. This we have been telling time again, because the recorded webinar will be available on the YouTube. You can refer which contains the PPT. Employees detail, we talked about it. Employees remuneration disclosure, does it apply to SME?
So there is no distinction like SME or non-SME. It's depending upon the type of the company in which you are operating. If it is a public company, yes, it is needed. If it is private company, that rule does not apply.
A secretarial audit report as an annexure board report also needs to be signed initial by two company directors.
No, the secretarial is this is a
this question I don't know. Why should they ask?
I think it is taken exactly in the literal sense what Sudhakar sir has mentioned. But actually, we should understand one more thing, that this document is not issued. This is not a company's document which is prepared by the company. It is a third party giving a document. So it is signed by them only, and so there are certain documents which we are just referring issued by some other party. So it is not to be signed by the or initialed by the company's director.
Is AOC2, that is certificate of arrangement of the related party, also mandatory annexure of the board report? Yeah, AOC2 is required.
Yes, it is. It is needed. So there are this AOC2 is required to be attached to the board's report in two circumstances. If the company has a transactions which are not at arm's length, then yes, all the transactions, all the related party transactions, such related party transactions are required to be given in AOC2. And if the company has a material related party transactions, whether it is an arm's length, those are also required to be disclosed. Now, what is the materiality, which is also defined for the purpose of Companies Act? The materiality is not defined. But again, going back to the guidance note issued by the institute, where the materiality definition is given, that is the rule 15 thresholds can be taken as a materiality threshold for the purpose of disclosure in AOC 2. That's but it is required, yes.
In a company, there is no CEO and only MD, and the MD can give CEO report.
I don't know in which context this question is. I'm not able to.
CFO certificate.
I think
MD can
CFO,
give
CEO
it.
certificate. Yeah, MD can give it. MD is virtually a CEO. Yeah. Is it mandatory for the small company to prepare the director report in abridged format as prescribed in the Companies Act, or they follow the format of detailed director report as prescribed for other companies?
I'll go by a format, detailed format only. I don't think that average for small companies. Yes, there is a separate there is a separate rules where some limited disclosures are required. That can be done, but for all other companies, the detailed director reports are to be prepared.
Latest amendment of May 10 will be applicable to the board report of financial year 2024-25 also, or it will be from 25-26.
It depends when you. This is absolutely my personal view. Sudhakar sir can add on that, but my understanding says that the day on which you are approving your director report. So if it is approved on and after 14th of July, then all the new requirement will come into picture. If it is before that, then the old requirement will be there. So that's how my understanding. Sir, if you can add something.
Correct, I agree with you. I agree with you.
Somebody is saying here, can we get the AOC to new format? It is not there in the MCA portal.
That's. I think it is not yet uploaded on MC website, but you can refer the e-gazette website where you will find the all the that company's management and administration rules, where you will find the new format of annual return. Then you will find the company's accounts amendment rules, where you will find all the new formats of AOC, XBRL, NBFC, CFS, all the details. So those notifications are already there. It's with me, right? So it's already there. Yeah.
If the company has not done any activity of the energy consumption, should it be disclosed? I think we talked about the energy consumption. As for the class B, H of the schedule 5 of the LODR, MDA companies have to provide the details of the material developments in human resources and industrial relation front, including number of people employed. Since the term material development is very subjective, what is required to be published?
Sorry, what is regard to this MDA, right?
Yeah, MDA is a management discussion analysis report. He says details of the material development in human resources and industrial relations. So he's saying what is required to be published in terms of the material developments.
Of course, it's a subjective terms, and it depends on the size and nature of the company, and to be dealt with case-to-case basis. I don't think that there can be a concrete answer can be given for this particular purpose. Sudhakar sir, can you add something on this? So,
See that anything going to impact your company as such, that needs to be treated as a material development. So it is up to the board actually what are the things which are material as far as the company is concerned. Accordingly, they have to reflect it in the MD and they.
AOC2 material RPT. If the company had not a turnover or it was not incorporated as on March 31st of the previous year, should all the RPT be disclosed?
yes, this is some small issue with the drafting, or you may say something, because the problem is that if my company was not there on 31st of March, so what is what threshold I should calculate? But I think there should be a calculated call company should take in this, and with the spirit of the law. Reason being, otherwise what will happen? I may go for the, and please do not take this as an advice I am giving. I am just giving a cautionary remark, right? And otherwise, company what may do that they will go with the transaction which is not at arm's length or not in the ordinary course of business, and they'll say it is not applicable to us because Rule 15 talk about the previous year net worth and all, which is not there. So I can do whatever I want to do, but practically it is not in the spirit of the law. So I think companies should take calculated decision on that front rather than going into the exact literal.
Technicalities.
Yes, that's what my view.
Audit trail related comment is not given by the auditor shall be replied in the board report.
No, if it is not given by the auditor, so what the board is going to explain, because audit trail related comments are if companies are not maintaining that audit trail, then if auditor is giving the remark on that the company has failed to maintain the audit trail or has not maintained the audit trail, then only the board is required to give the comment. Now, if company is not maintaining the audit trail, auditor is also not giving the comment, then it's a problem. It's a non-compliance by the company also and the auditor also as far as not reporting that.
Default of the fraud as per the section 143 has to be mentioned in the board report by secretarial auditor or cost auditor. Also, section 143 mutandis applies to the secretarial auditor and cost auditor also. I think that's a comment somebody has put.
Yeah, this question is already addressed in auditing standard for CSAS 4, whereby which is again a mandatory standard applicable to the practicing company secretaries. So CSAS 4 talks about the auditing standard on secretarial audit, in which this particular aspect is already addressed, and also a guidance note on that is also already there. So again, as sir said, we will not give everything on platter. You go and do the research, so you can refer. I gave the sources.
The below
This
wording
fraud
of
thing, this fraud thing, the cost auditor need not give in his report, but secretarial auditor certainly has to give it because he is affirming about the compliance with the provisions of the Companies Act by the company. So he has to bring it in his report about the fraud occurred.
the below wording given by the auditor in the report will be required in the board in the report. Based on our examination, the accounting software used by the company for maintaining its books of account during the year ended so and so did not have a feature of the recording audit trail facility.
I think
Somebody
yes.
has actually.
Yes.
Yeah.
Yes, I think it should be explained by the board.
If the company has employees on secondment basis in a post-disclosure format of ICC, what is to be mentioned?
I'm not too sure what is the meaning of this question, but again, going by the same answer, that it is again not depending upon that whether employee on the role of the company or appointed on the secondment basis or whatever basis. It's the establishment on which this law is applicable.
Yeah, you're absolutely right. Whether the secondment or not, so long as this law is applicable for the establishment, so it is there. Yeah. Do we have to disclose the board report in regards to the dematerialization of the shares? I think you talked about it, the promoter share, etc. Sachi has already given the presentation on that. Some listed companies do not mention names of the staff and employee. This we talked about it. AOC 1 part of board report of the financial statement. What is AOC 1? I don't know.
AOC 1 gives the disclosure with regard to the it gives the information in respect of statement containing to the features of the containing salient feature of the financial statement of subsidiary and associate companies and joint venture. It is the requirement which is arising out of section 129 subsection 3 read with rule 5 of companies account rules. So it's a part of your CFS consolidated financial statement, not as a board report. However, there is a practice also, some of the companies put it as part of the board report, but it's a more giving the detailed disclosure about a subsidiary. Now, since the AOC1 format, AOC1 topic came into picture, so the format of AOC1 is also now modified with respect to the with in the this 30th May notification. Though there was a minor modification, not much modification in that, but there is a change in the format. Also, the signature requirement, because the AOC 1 format talks about earlier AOC 1 format says that it has to be signed exactly in the same manner in which the financial statement is to be signed. However, the new AOC 1 is having one signature by the any one of the director, company secretary, CEO, CFO, or even the IRP in case of, or RP in case of IBC. And it is followed by the professional certification, which includes CSES, CWS. So this is how the new format of AOC 1 looks like.
Anshuman, somebody is actually asking you, kindly repeat the applicability of the form AOC 2. I lost when you are discussing.
Okay, so I just repeat once again. So AOC 2 disclosure is required to be given for two kind of related party transactions. One, the part A of the AOC 2 talks about the details of the contract or arrangement or transaction which are not at arm's length. So all the contracts which are not at arm's length are required to be disclosed as part of the AOC 2, which have various disclosure also, like name of the related party, nature of contracts or arrangement or transaction, duration, that I said about this actual expected contractual amount, justification, date of board approval, date of shareholders approval, SRN of MGT 14. So these details are to be given as part of AOC 2 part 1. Now, if you have the transaction which are at arm's length, but material, so that is also required to be disclosed in AOC 2 format in part 2. And what is material related party transaction? Though for the purpose of Companies Act, it is not defined, but guidance note issued by ICSI is defining it, that the threshold under Rule 15 can be taken as the materiality limit, and which is obvious also. If it is not material, then why we are going to the shareholders for approval? It is material. That's the reason it is we are going for the shareholder approval. So that can be taken as limit for the material related party transactions.
When can we take today's webinar in the YouTube? It will be available in 2-3 days time. You can wait for it. If the company held 25 board meeting in a financial year, reported the board input, but in MGT2 mention only 23 meeting, then what are the consequences of this error?
May God bless you. I can't comment on it.
Non-compliance, what else?
Yes.
Independent director appointment, the constitutes the audit committee are not applicable in a wholly owned company. In this case, how the performance evaluation to be done? It's only the board performance, individual director performance to be done without the committee or independent director meeting.
This is not the question.
I think we have.
I think just a small thing, that if 178 is not applicable, because performance evaluation at 3 places in the Companies Act, one is in 134, one is in 178, and one is in Schedule 4. If it is not 178 and Schedule 4 is not applicable to you, you can ignore it. You just follow 134. That's the answer.
That is all. We have come to the end of the questions. And if anybody raises hands, we can look at it. Let us see.
If anyone wants to speak, they can raise their hand. They will be allowed to speak.
So far, nobody has risen the hand, I can see.
I think Sakshi's presentation and Anshul and Sudhakar clarification is sufficient.
Yeah, that's what it looks like.
Yeah. So with that, we can now end our session. Thanks all.
Yeah.
Thanks for your time. Thanks for your participation. Thanks, Anshul, for your active answers.
My pleasure, madam. Thanks for your invitation. And thank you very much, Sudhakar sir. After a long time, I couldn't see you. And Bala sir, thank you very much. And Sakshi, it was a nice presentation. Thank you very much.
Thank you, Sudhakar. Thank you, Bala.